Hey everyone, and welcome back. Today, we're going to be taking a deep dive into the U.S. rental market.
Oh, yeah. This is a topic that I think is on a lot of people's minds these days.
It really is.
Yeah.
So to help us unpack all of this, we're checking out a blog post from the Texas Cash Buyers Network.
Okay.
Have
Yeah.
you heard of these guys?
I have actually. I've been following them for a while now. They're a really great resource for real estate investors.
Yeah, the group was actually founded way back in the mid-2000s by a guy named Dr. Raymond Johnson.
Oh, wow. So they've been around for a while.
Yeah, they've got a ton of experience, and they even have a Facebook group now. You can find it just by searching for Texas Cash Buyers Network on Facebook.
Nice. Yeah, their Facebook group is super active. Lots of good discussions and insights in there.
Yeah, so we're definitely in good hands with this blog post. So let's dive in. What's the big picture here? What's going on in the rental market right now?
Well, the big story is that the U.S. rental market is showing signs of cooling down.
Cooling down.
Yeah, after years of skyrocketing prices, we're finally starting to see rents stabilize and even dip in some areas.
Whoa, hold on. Rent's going down. That's a pretty big deal.
Mm.
What's causing this shift?
Well, one of the main factors is an increase in housing supply.
Okay, so more housing options.
Exactly. There's been a surge in new apartment construction, which means there are more units available for renters.
And more options means?
Less competition. And when you have less competition, you tend to see prices adjust.
Makes sense. It's like supply and demand 101.
Exactly. The blog post even mentions that this cooling trend is especially pronounced in certain regions like the Sun Belt.
The Sun Belt. Remind me of what that is again?
Sure. The Sun Belt generally refers to the southeastern and southwestern states. It saw a huge population boom in recent years.
Right. Lots of people move into those warmer states.
Exactly. And that drove up demand for housing and pushed rents higher, but now the supply is catching up.
So now places like Florida and Texas are seeing some of the biggest rent reductions.
Yep. The blog post specifically mentions Fort Worth, Jacksonville, and even parts of Oregon as examples.
Wow. So it's not just a national trend. It's really playing out differently in different regions.
Exactly. And that's a key takeaway from the blog post. It emphasizes that there's a lot of regional variation in this cooling trend.
So it's not like rents are dropping everywhere.
Right, there are still some areas where rents are actually continuing to climb.
Really? Like where?
The blog post mentions Providence, Rhode Island as an example.
Okay, what's going up in Providence?
Well, unlike the Sun Belt, Providence hasn't seen as much new construction, so the supply of rental units is still pretty tight.
Ah, so demand is still outstripping supply, which keeps those rents high.
Exactly. It really highlights how important it is to understand local market conditions.
Right? It's not enough to just look at the national headlines. You got to zoom in and see what's happening in your specific area.
Absolutely. The rental market is incredibly nuanced, and there's no one-size-fits-all answer.
Okay, so we've got increased supply in some regions and regional variations. But what about the bigger economic picture? How do things like interest rates play into all of this?
That's a great question, and it's something that Dr. Johnson addresses in his blog post.
Okay, I'm all ears.
Well, believe it or not, rising interest rates can actually contribute to a cooling rental market.
Wait, really? How does that work? I thought higher interest rates meant everything gets more expensive.
Well, think about it this way. When interest rates go up, mortgages become more expensive.
Okay, that makes sense.
And when mortgages are more expensive, fewer people can afford to buy homes.
So they stay in the rental market longer.
Not necessarily. It's more like when fewer people buy homes, fewer people are leaving the rental market.
Oh, I see. So the pool of potential renters isn't growing as quickly.
Exactly. And that can help to ease demand and potentially lead to lower rents.
Okay, so it's like a domino effect.
Yeah.
Interest rates go up, that impacts the housing market, and those ripples eventually reach the rental market.
Exactly. It's all connected.
This is getting really interesting. But before we go too far down the interest rate rabbit hole, I'm curious about something else.
What's that?
Does this slowdown in the rental market hit all types of properties equally? Like, are we seeing the same trends in single-family rentals versus apartments?
That's a great question. And it's something that Dr. Johnson specifically highlights in his blog post. He points out that there's actually a distinction between how single-family rentals and multifamily rentals are being impacted.
Okay, I'm intrigued. Tell me more.
Well, single-family rentals are basically houses that are rented out.
Right.
And multifamily rentals are things like apartment buildings.
Got it. So what's the difference in how they're being affected by this cooling trend?
Well, the blog post cites a pretty interesting statistic. It says that from January 2023 to January 2024, multifamily rents grew at a much slower rate than single-family rents.
Really? Like how much slower?
Multifamily rents only grew by 200%, while single-family rents grew by 47%.
Wow, that's a significant difference. Why do you think that is?
That's a great question. And while the blog post doesn't dive into the specific reasons, we can explore some possibilities.
Okay, let's brainstorm.
Well, it could be due to a number of factors. It could be that investors are shifting their preferences away from multifamily properties, or it could be that different economic factors are impacting each sector differently.
Or maybe it's a combination of both.
Exactly. There could also be shifts in renter demand that are playing a role.
So many layers to this rental market onion. I'm already feeling smarter just thinking about it.
Me too. But I think we've covered a lot of ground for now.
Yeah, let's take a little break to let all this information sink in. Then we'll come back and tackle the rest of this deep dive.
Sounds good. I'm ready for more when you are.
All right, we're back and ready to keep digging into this rental market mystery. We've been talking about these cooling trends and potential rent drops, but I gotta be honest.
Yeah.
Part of me is still thinking, okay, but what about affordability? Rents are still super expensive in a lot of places.
Oh, absolutely. You're hitting on a really important point, and it's something that Dr. Johnson acknowledges in his blog post, too. He points out that affordability remains a huge challenge, especially for lower-income renters.
So it's not like these rent reductions are some magic solution.
Right. It's not a simple fix. Unfortunately, in a lot of areas, rents are still really high relative to incomes. And to make matters worse, the number of truly affordable units has actually gone down.
Seriously.
Yeah, Dr. Johnson mentions that in his post. It's a pretty sobering thought.
It really puts things into perspective. We talk about market trends and interest rates, but at the end of the day, this is about real people and their ability to find a decent place to live.
Exactly. We can't lose sight of that human element.
For sure. Okay, so we've talked about the challenges for renters, but what about the investors in this equation? What does this rental market roller coaster mean for them?
Well, Dr. Johnson offers some interesting insights on that front. He's observed that investor activity has actually slowed down a bit recently.
Really? That's
Yeah.
kind of surprising. Wouldn't a cooling market be a prime time to buy?
You would think so, right? But remember those rising interest rates we were talking about?
Oh, yeah.
Well, they're having an impact on the investment side of things, too.
Makes sense. Higher interest rates make it more expensive to finance those property purchases.
Exactly. So investors are being a bit more cautious these days.
So it's not as simple as rents are going down, time to buy.
Nope. It's a more nuanced situation than that.
So is this slowdown in investor activity a good thing or a bad thing?
It's kind of both.
How so?
Well, on the one hand, it could mean that some investors are getting priced out of the market, especially those who rely heavily on financing to make those purchases.
So that's the bad side. But what about the good side?
Well, on the flip side, this slowdown could also create some unique opportunities for investors who are well prepared and have a long-term investment strategy.
You mean those investors who are in it for the long haul and aren't afraid of a little short-term volatility?
Exactly. With fewer investors competing for properties, there's a chance that those who have the capital and the patience could find some really good deals.
So it's all about recognizing the current market dynamics and making strategic decisions based on your individual goals.
Absolutely. And that's where resources like Dr. Johnson's blog and the Texas Cash Buyers Network can be so valuable. They provide a platform for investors to connect, learn, and share strategies for navigating this complex market.
It's like a community of support and shared knowledge.
Exactly. And it's a great example of how networking and collaboration can really make a difference in the real estate world.
Speaking of Dr. Johnson, I got to say I'm really impressed with his insights. It's clear that he's not just an academic theorizing about the market. He's a seasoned professional who really understands the real-world challenges and opportunities that investors face.
I totally agree. His blog post goes beyond just stating the facts. He helps connect the dots, explain the why behind the trends, and offer practical guidance for anyone involved in real estate investing.
Yeah, it's definitely a valuable resource.
Oh.
Okay, so we've covered a lot of ground today, from cooling trends and regional variations to the impact of interest rates and investor activity. But like always, there's always more to explore.
For sure. This deep dive has provided a solid foundation, but the journey of understanding the U.S. rental market definitely doesn't end here.
We're back for the final stretch of our deep dive. As we wrap up this exploration of the U.S. rental market, it's pretty clear that this isn't a simple topic.
Oh, definitely not. There are so many moving parts and factors to consider.
Right. We've talked about cooling trends, regional variations, affordability challenges, the impact of interest rates on both renters and investors. It's a lot to keep track of.
It really is, but if there's one key takeaway I hope our listeners remember, it's this.
What's that?
The importance of understanding your local market.
Okay, so we've touched on this before, but why is it so crucial?
Because national trends don't always tell the whole story.
So just because rents are dropping in some parts of the country doesn't mean they're dropping in your neighborhood.
Exactly. You got to zoom in and see what's happening on the ground in your specific area.
So whether you're a renter looking for a new place or an investor thinking about buying a property, that local perspective is essential.
Absolutely. It can make all the difference in your decision making.
It's amazing how much things can change from one city to the next, or even from one neighborhood to the next.
It really is. Dr. Johnson's blog post did a great job of highlighting those regional variations.
Yeah, he mentioned how some areas are seeing rent drops, while others are still experiencing increases.
Exactly. It just goes to show that real estate is a hyper-local game.
So what's the big takeaway for our listeners? What action should they take after listening to this deep dive?
Well, I'd encourage everyone to do a little research on their own local rental market.
Okay, so like what kind of research?
Well, start by asking yourself some basic questions. Is it a renter's market where landlords are competing for tenants? Or is it a landlord's market where renters have fewer options?
Okay, so figure out what the landscape looks like in your area.
Exactly. Once you understand those dynamics, you can make more informed decisions, whether you're trying to find a new apartment or thinking about investing in a rental property.
That's great advice. You've definitely inspired me to do some digging into my own local market.
Awesome. That's what we love to hear.
Well, expert speaker, I want to thank you for joining us on this deep dive into the U.S. rental market.
It is my pleasure.
You've shared some incredible insights and helped us make sense of this complex and ever-changing landscape.
I'm glad I could help.
And to our amazing listeners, thank you for joining us on this journey into the world of real estate. We hope you found it informative and engaging.
We sure did.
Remember, knowledge is power, and the more we learn, the more empowered we become.
Absolutely.
So keep those minds curious, and we'll see you on our next deep dive.